Hello, this is Andrew from Trend Following Mentor, and what I'm going to talk about now in this short video is I have a group of almost these short study guides that I'm coming out with that are extremely powerful, and they teach you a lot of things. They're not wordy, they're short, 10, 15, 20 pages, and many times I include the video with them. And in this segment, what I'm going to be talking about is avoiding bear markets and the next Great Depression. I mean, we know what the financial situation is right now, and it's kind of rough. And this is what these are going to look like. They're called study guides. And for those of you that remember, when we were in school, we had Cliff Notes. And the idea is to get you up and running very quickly. I don't know about you. I don't have a heck of a lot of time to read 300-page books and then try to glean what is important. What I do is I hit on exactly what you need to know on a variety of topics. We have this one. I have one also on learning how to be, learning the correct psychology for trading. But let's focus on this. This is such a powerful point, avoiding bear markets and the next Great Depression. The fact is, you need to know where you're going. And in the stock market, that if you don't know where you're going, then you're never going to get there. You don't even know where you're located. The problem is, no one rings a bell when the markets turn really negative. And again, in the last 10 years, we had two, let's say approximately 50% drawdowns, one right after the next. I mean, it's psychologically hurtful as well as financially hurtful to go through these bear markets. And it can be even worse. What the reality is that in the Great Depression, the stock market went down about 89%. It took 25 years to get back. 25 years. That's a lifetime. And people say it can never happen again. Well, in the Japanese stock market, which again people say, well, it can't happen in America, and I tell you it will happen sometime, maybe in our lifetime, maybe not in our lifetime, but the stock market will really fall. And the fact is that the Japanese stock market went from 39,000 to 9,000 today. It's a lifetime. People have lost all of their life savings. And really, during a bull market, everyone seems to be smart. You have primarily 3 out of 4 stocks are going to go up in a bull market. In a bear market, it's the exact opposite. 3 out of 4 stocks will decline. And Warren Buffett came out with a statement. He said that in a bear market, you see who's swimming without a bathing suit. And Warren Buffett is one of the world's greatest investors. He went through 2 50% drawdowns in his BRKA, his Berkshire Hathaway. What these short study guides teach you is a technical approach that you can use on any trading platform. I use MetaStock. It's simple, it's easy to work with. However, you can also use a charting program on, let's say, quick charts. I mean, big charts. And it's technical, it's simple, and simple means that it'll hold up. What it means is you have an exact plan. That means that you're going to be knowing more than 90% or more people that got destroyed in the last bear market. And the fact is that you have a trading plan. It is so simple that you're going to be smarter than the world's greatest investor when you follow this robust course. It's very simple, very to the point, and the facts are, if you go back over the last, since 1929, about every 5 years or so, we have a bear market. So our last bear market started in June of 2008. It's not that far out of the spectrum to have a drawdown or a bear market. Putting into perspective, in March of 2000 till October of 2002, stock market fell 49.1%. In June of 2008 to March of 2009, it fell 54%. These aren't rare. There's time and time and time again. 1973 to 1974, the stock market fell 48%. So the fact is, you have a choice. You can have an average compounded annual rate of return of about 8% just by buying and holding, or you're going to have, actually, you can have a maximum drawdown of about 54%. So this buy and hold really doesn't hold up. And even like if the professional advice from, again, financial advisors, I've heard this, that during a bear market you buy quality stocks. Well, the fact is, in the last 2002 bear market, if you want to use the example of quality stocks, McDonald's, Alcoa, Merck, Coca-Cola, Disney, some of these things fell 50%. I mean, who needs to go through that kind of aggravation? And then there's other professional advice that says you can go into the utility sector. Well, the Dow Jones utility average plunged 60% in the 2000-2002 bear market. Again, doesn't make a heck of a lot of sense. So the reason I wrote this is I said there has to be something better. And that's why I wrote you this. And this is what I really believe in. And there's several ideas in which I teach that will keep you on the right side of the market. No one has a crystal ball. And this methodology or this plan is not perfect, but it will keep you out of big problems. It's very inexpensive. It's right here. You can see them, and we're going to be doing more and more of them. I mean, my goal is to have many of these short study guides up and going. It's $9.99. You get the written material, and there's a video to go with it to teach you. So I invite you to come to trendfollowingmentor.com. I invite you also, I have a book coming out with Wiley Books. It's called The Bible of Trend Following, which I teach everything that I've done over the last 18 years on how to be a professional trader. Again, there's nothing perfect, but you have a trading plan. The idea is nothing is sugar-coated, nothing is get rich quick, but if you have a business, you have to have a business plan. This is a trading plan. This tries to keep you on the right side of the market. Thank you. This is Andrew from trendfollowingmentor.com. Thank you for watching.